Good morning, good afternoon, everybody. Welcome to the F.A.C.E show Friday, and we have a new Fed head. Trump has finally picked his man, or did he? Is Warsh a bit of a second choice compared to some of the others? Either way, Kevin Warsh is going to be the new Fed head. And, well, markets had a little bit of a wobble when they found out he was potentially going to come in, but we didn't do much on that confirmation. But anyway, it's going to mark a new era for the Fed and FOMC. So we'll wait and see what happens. With that, good afternoon, guys. We've got nearly a full house. Steve, Stel, and Kay on.
Hello.
Hello.
I was hoping it would be Kim Kardashian as Fed chair, but damn it, no luck.
Haven't you got enough box sets to watch without one about them being at the Fed? I don't know. Strange man you are, Stelios. So what's your take, initial take on this then?
Well, it's interesting because, Warsh has what the market thinks, I think, is that he's going to be playing along with setting lower rates, just like Trump wants. But let's all remember that Warsh has always been quite vocal about the Fed's balance sheet and how he's always been talking about, it needs to be reduced. Of course, every Fed chair will say that before they become Fed chair, but what happens afterwards is a different story. Theoretically, Warsh is somebody who's going to steepen up the curve because he's going to be cutting rates and he's going to be reducing the Fed's balance sheet, which is not good news for the economy. So I don't know. I mean, I don't know what to make of it. There's a lot of talk and a lot of things that he has said before, but it all boils down to what he's actually going to do. So I actually don't know. And as a matter of fact, I mean, the markets are not doing much. Yields and okay, the dollar's whipping around a little bit, but yields are very steady, which is like 10 years is almost unchanged today. So that's a bit strange.
Yeah, I mean, in one sense, maybe it's the fact that he is an old Fed hand, so it's not jumping into the unknown, so to speak, regarding anyone else that gets picked. But yeah, I think we'll have to wait and see as soon as he utters his first or makes his first comments or words at the next Fed meeting to see what he's going to do and how that all works. But anyway, he's got to be fully okayed and nominated by whatever houses, Senate and whatever, I think, before he actually gets in the job. So there's a few more hoops to jump over yet. Kay, your early thoughts?
My early thoughts. Yeah, I tend to agree on that hawkish thing, but it's actually part of the plan already was to get yields rates lower and yet not explode the balance sheet or reduce the balance sheet further. I don't know what to really expect, but we've been talking about this obviously already in linked in our chat room, and I tend to agree. He's not. I don't see him cutting like 50 BP straight away, or it will be a 50, and then we're kind of at neutral. So I don't see him going like really much further than that. The balance sheet, could be reduced further. The problem is if we get such a kind of policy, is that they risk pushing inflation up a little bit, and I don't know. I think the market as we see it, of course, it's bought dollars on the back of it, it becoming clear that it was going to be washed overnight. Then when it's announced that they actually sold it and now they're buying it back, I think people are still will have to figure out what he really means. But the big picture in Trump's mind is extremely well known and traded already in the markets. So I doubt that we are going to see too many shockwaves before we really get to the first Fed meeting. And an interesting remark there is that remember, because we always look at dissenters, etc., in the Fed meetings, but remember Bowman, she was kind of leaning on the hawkish side until she saw the opportunity, as I said in the room, to upgrade her bar stool into a throne. And so then all of a sudden she went leaning on the dovish side, but she may actually just go back in the middle or back to the hawkish side if the data don't tell her to be overly dovish. So I think it's going to be a bit of fun and games in the next few Fed meetings.
Yeah, absolutely. But already the reactions are coming in.
Mm.
Elizabeth Warren, who isn't Powell's favourite friend,
Oh,
nor
no.
Trump's for that matter, has already pushed back against the nomination, as you can see there on the live squawk feed. Got Senator Tillis. Is going to oppose the confirmation of any Fed pick, so it doesn't matter who went in the job. So yeah, all this horseplay to happen.
Yeah.
The important thing is, what does Nancy Pelosi think? 'Cause I
Oh,
want to
No, she's probably
I
what?
copy her
No,
trades.
stocks.
not what she thinks, what she actually traded.
Yeah,
True,
exactly.
But I mean,
Exactly.
if you look at the bond market, 3-4 BPs is what we got in the 2 years, and the tens have moved two BPs. I mean, I think that's the market telling us that let's wait and see what's really going to happen, right?
Yeah, I think so. I think so. Right, so we know now anyway that uncertainty has been removed from the market, so we can get on with the rest of our lives, thankfully. And that came nice and early in the US day, so hopefully it's not going to disturb pub time later on. Right, obviously we've got to look at what's going on in metals. Absolutely bonkers moves again, but this is par for the course, folks. When you get this volatility and you get markets moon shooting like they do, if they go up fast and hard, they're going to come down just as fast and hard when people want to jump ship and get out. And there's always a small exit door with a lot of people trying to get through it at once. So there's several factors behind this. Obviously, the lazy link has been the Warsh story. We've also got a bit of easing potentially in Iran with Trump and his armada. Apparently, they're all going to start talking to each other rather than the US threatening and Iran threatening back. So where there might have been some weekend risk for that in bombs and missiles flying, it could be that gets dialed down. Yesterday, Iran announced that they would be doing live drills in the Strait of Hormuz using live ammunition, which always sets up for a little wobble with something going astray and hitting something it shouldn't. But as I said, they're potentially heading towards talks. So that's a bit of a risk move coming out of that. Same thing, we've seen a little bit of a move down in oil, nothing that's really noticeable, but yeah, just a bit of risk removal from that. Okay, just looking at the metals, you've been talking about this gamma stuff in the room yesterday, but it's just part of the course of markets. If they're going to go up hard, they're going to fall down hard.
Yeah, again, we've seen a bit of a wobble when New York walked in. Yeah, that's going to be a bit of a tricky one. And again, as I mentioned on the Flow Show, it's probably more important what we are going to see after the weekend and starting February. I think we're going to see more fun and games probably today before the month is over. Yeah, gamma negative is never a funny thing, especially not for the ones having to trade it. And I think that's just what we see. But let's see. I mean, 100 in silver, we're turning right around. 5,000 in gold, we are not far. Well, in a former life, $80 would have been a move. Today is just a blip. So let's see where we end and especially where we start the next month. And there, I think it's going to be important what's done. I mean, as we were talking about it on the Flow Show as well, fundamentally, not a lot has changed so far. And yeah, so I still think somewhere it's going to be a buy on dip, but remains to define how big a dip, what we are going to call a dip at the end of the day.
Yeah. Now, through the volatility, some of the levels are showing up. The 50 retracement of this spring has come up at 49.36, and we got within touching distance of that. I think this 51.10 area is going to be important today because we've had the move below. we've had a little poke above, and now we're coming back below it. So I think this could set the tone for what happens, particularly today, and maybe for a few sessions after. If we close above here, then obviously it's going to look like this is just going to be yet another dip that's going to get bought into. But if we're finding a bit of resistance in this area, you can probably take it from 90s up to that 50s area. Then it might be that we're not done with the selling and we're heading for the downside. So if you were a dip buyer while it's trading up in the 55s, you've got a couple of clues as to whether that's the best strategy for now or in the short term. Still, there's a lot of assets, pairs or whatever, and I'll bring you in your charts in a minute, that are sitting on levels where it's one of those weeks where it's where we close it's going to be important. I was pointing out the 119 in euro dollar. We're finding it a bottom at the moment. We've got a big expiry going off today. Those of you in our chat room will know about that. I'll just show you that, the rest of you quickly. Orders and options. So we've got 6 billion rolling off at the figure and another 2.43 round about where we're trading at the moment. So now the Trump Fed news out the way, we could find ourselves glued here. So keep an eye on the dollar in general. If it's moving elsewhere, but this one's glued, that could be an option pull and maybe sets up a trade opportunity after. But yeah, still, there's a few pairs, Aussie as well. Just where we close today could be important for where we go next.
Yeah, it's month end. I think you mentioned it, so we have to be wary of that as well. Yeah, I mean, Warsh is, the whole Warsh nomination thing is going to be moving pairs around. But again, today's move, because it's month end, I always tend to give a little bit less importance. But obviously, it is going to be important to see where we close the month. Can I take the screens for a bit and just show a few things? Yes, sir. Thank you.
There you go.
Desktop 1. Okay, so I'm going to go through a few things quickly because we have Grega as well here with us. So first of all, yields. We are touching this resistance trend line. I've said for a while, I think these are going to resolve to the downside. But if we close on a daily close above 431, I am changing my mind on that, and I'm just gonna sit and watch. But it's definitely not going to be looking like yields are going to be moving lower if we do break above there. Wait to see what happens with Warsh and what he says, etc. But yields not going the way I thought they would be going. But you can't get. There's going to be times when I get stuff wrong, quite often actually. So silver. Let's look at silver first. And for those who are Forex Analytix members, they will know that I, luckily or not, Tuesday I got out of everything. My last chunks of silver and platinum and palladium that I had, and I said I think this parabolic move eventually is going to go pop. I didn't realize it was going to be this week, but anyway, we are moving lower. We are retracing, and it's quite drastic, because I think there's been quite a few late leverage longs, and any video you look at on YouTube or wherever, they're saying $500 easy, silver, etc. I'm like, no way, this is not going to be happening, obviously. So we retrace. I am going to be looking to buy, actually not silver, but silver miners, because they've been really underperforming. And from what I was reading, they're using on average around $30 to $35 silver as their estimates for the next year and etc., which I don't think we're going back to 30. So this is what I like. Platinum is one I'm really looking at closely. I'm looking to buy 2146 or 2150-ish. But I did get a little bit of FOMO today. I posted in the chat room. I started buying very, very small, like a quarter of my position, quarter size at 2290. And that was a bit FOMO. I think we probably will hit this 2150 level, but that's where I'm going to start accumulating more, because I do like platinum on a macro level. The whole thesis about electric cars and internal combustion engines, I still stand by that, and I think that platinum and palladium are going to keep getting used extensively in cars. Plus, I think that this dip will get bought eventually in all metals, but Platinum is the one I'm touching first, simply because I think it's the one that's most undervalued. And I look at platinum versus silver chart, and that has been going bananas over the past 20 years, which is crazy. So I really like platinum, and this is the one I'm starting to buy. So currencies, let's have a look at currencies. The dollar is, well, it doesn't know what it wants to do. It bounced on the rumors of Warsh yesterday, and it kind of going a little bit further today, but it is still looking pretty weak. But we're within this channel, and anywhere near this 94, 94 and a half, 95. I think it's probably going to be the low. But we wait and see what happens. So one of the dollar pairs that I've been talking about for ages, saying this is the one I would not want to be long of, is dollar mex, and I've had a bearish bias on our analysis in the platform for a few months now, quite a few months. Today I'm going to be taking it back to neutral because I think we're pretty much done. We had been talking about 1740, I think it was, for ages. And we got down to 17, 12, 13, whatever, bouncing back again. I think the move is probably done by now, but so if you've been short to spare, I think this is a good level to be definitely taking some off, or maybe even all of it off. But that's one I wouldn't. I'm now changing my mind. I'm still bearish dollar NOK. I like that a lot still, and it's been going well. It broke this down this channel, tested once, tested twice, bang. That's it. There's going to be a time when I'm going to be neutral on this again, but I'm still bearish on this. I'm sorry, I'm trying to run through this quickly because I want to hear what Greg has to say. Stocks is still not looking bearish. Okay, even with everything happening, and yes, there is some kind of relief because of US Iran potentially stepping off, taking the fingers off the buttons. But if you look at this chart, yes, it's easing off, but it's definitely not bearish at the moment. So I don't see any reason to sell this. Am I going to be chasing this higher? No, but if I was long, I'd be sitting here waiting, see what happens. Yes, that's pretty much all I want. Oh, one more thing, cryptos. We have to mention cryptos. Both Bitcoin and Ethereum are breaking down from what looks like a sideways bearish consolidation. We've been talking about this for weeks now, and they have been underperforming risk assets in a big way, unfortunately, for crypto fans. And Bitcoin has broken below. What's left is these lows at 80, 80.6 or whatever that is, and then I don't know where we go. Ethereum is similar. We are at support, big support here. If we break this, we go down to 2100, I think. So again, I'm going to repeat what I said last week. Be very careful if you like cryptos, if you're long, because they are looking very weak, and I think we're going lower. So that's it from me, my friends. I hope I wasn't too quick and my squeaky voice is not too annoying.
No, it's not too annoying. A bit annoying.
Oh, I have been bearish stocks. Don't worry about that. I have been, if you're following. There were times when I was bearish, but anyway, I follow price action, I follow fundamentals, and for now, I'm not inclined to turn bearish. It's coming though. It is coming.
Cool. Thank you very much, mate. Now I think we'll go live over to Grega. Afternoon, mate. You still on the ski slopes?
Hey, man. No. Can you hear me? Yes.
Yeah, we can hear you.
Yeah. No, I'm home. I'm charting. I have to come back home to office early. I mean, with this volatility that we have so far for the last few days, few weeks, I mean, it's very important to not to be away, but be at the screens, of course. Because we have some very beautiful price action, and let me just share the screen. Okay, can you see the screen?
Yeah, got it. Okay, mate.
Yes, sir.
Yeah. Okay, so last time when I was here, we were discussing about this resistance around 99.50 for wave 2 recovery. So the idea was that that was just a temporary recovery after at the beginning of a new year. So I was looking for a continuation to the downside. And what is really important right now to understand is that we are basically already trading at the new lows. So it means that we are most likely in a fifth wave, meaning the final leg, the final sequence of that drop from January 2025 highs. So it means that in a few weeks from now, we could see some stabilization on the dollar and potentially even some recovery later in the year. Also, of course, we still have room for a bit of more weakness here, let's say maybe 94, 93, but just you have to realize that we could be really in late stages of this decline. So on the back of this story, also it's important to understand where the large speculators are. And keep in mind that with the recent sell-off that we have seen so far, because that's obviously not up to date, we will most likely see even more extremes here or regarding short positioning. So I'm afraid that we are moving into this some kind of a period where we really could consider some stabilization and potential recovery. It doesn't mean that we should see any kind of strong uptrend, but at least some pause is something that I would be watching for. Also, if you look at the S&P 500, that's what is probably the most important, is that despite this sell-off on the dollar that we have seen so far, stocks are really struggling up here. So looking at this wave pattern, I can easily count 5 waves up here. Also, wedge pattern suggests that we could be running very late into this recovery. And as I already said last time, this kind of a price action reminds me to what has happened here at the end of December and the beginning of 2025. So prices were keep moving to the upside, but then in February we have seen very strong reversal, and based on seasonality charts, the S&P 500 or stocks in general tend to see some pullbacks in February, especially if we will see more upside, if we see some gains from the beginning of the year we have seen so far in January. So that's what I am expecting, let's say, potential dollar stabilization. Maybe at the end of February, we could already see some interesting price action. Also, when looking at the euro dollar, keep in mind that triangles, based on the Elliott Wave principle, triangle occurs prior to the final move within larger trend. Why is that? Because the price action is consolidating for a pretty long time. There are a lot of buyers and sellers that are trying to catch the right side. Unfortunately, after some period, they will either give up or they will try to play the breakout. And whenever this breakout occurs, they are already late. So it means that most of the traders will be caught on the wrong side of the market, and usually this will cause the opposite reaction from the growth expectations. So in my opinion, there's a pretty strong resistance here around 1.21, maybe another 100, 200 pips higher, and we could possibly be headed into some serious resistance. So even if dollar maybe could still, I'm still expecting the dollar will continue to the downside in the next few weeks. But when looking at the euro, maybe I would rather stay aside on this one and look and focus on more stronger currencies like commodity currencies here. I'm looking at the overlay chart. That's basically back from January 16. That's exactly when all this dollar weakness started. So you can see here that commodity currencies are on the top. And I think that if you're looking for some kind of opportunities here, that on those like Aussie, Kiwi, there can still be opportunities to see some more upside to catch some gains here. And if I have to maybe define some very interesting support on Kiwi, I think that here around 0.6 is a very nice, beautiful technical level. We have seen a pretty aggressive move through that level, retested it on the intraday basis, and now maybe we'll see some kind of a consolidation, maybe this kind of a blue wave 4 degree, maybe the hard degree of a black wave 4, but still, whenever we see some kind of a pause here, maybe there could be one more chance to catch this trend that will finally take us back to this July 2025 highs. But up there, I would be very, very careful, especially when we will be able to count 5 waves up from there. So regarding dollar trend is still down, but be careful because we are headed into some very important extreme levels. If you're looking for some opportunities, rather choose commodity currencies than, for example, euro dollar, or maybe even Japanese yen at this point could still be very interesting, especially now when stocks are having some difficulties at the resistance, and with dollar yen coming off pretty aggressively. If stocks will continue lower, let's say that we have another day like yesterday, another session like this, then Japanese yen could be maybe much more attractive than the dollar itself. And when I'm looking at this dollar yen, like we have been discussing about that last time, I believe we highlighted this pattern, this doji top on the candlesticks daily chart, and where we have seen just a temporary spike to a new high before market reversed lower. And so far, what I really like here is that we have seen not only that we have reversed lower, we also broke quite nicely this previous support here around 154. It could be the first resistance, but I would allow price maybe to come slightly higher towards 155.70. And if we look closely here on the 4-hour time frame, that's basically a gap from this week right there. And usually when you have such a strong decline, it usually suggests that we have an ongoing 5-wave drop, that you're in this wave free. So after consolidation, there can be opportunities for more weakness. So I'm looking for this to be a wave 4 with very nice resistance. As I said, first one is already here, but the second one lies a bit higher, and that would be around the 50%, which is still fine and acceptable for a wave 4, but not more than that. So that area up here should maybe limit the upside, and I think that maybe there could be some opportunities here on the downside of the dollar yen, while we are definitely still, as I said, positioned for dollar weakness. Also regarding regarding gold, keep in mind that here we are looking at the monthly chart. We have gold volatility that is moving into some extremes, like not close to what we have experienced back in 2020. And when you have such a strong parabolic move, like Stelios said, with this kind of volatility, well, keep in mind that there can be some very nasty price action going on, and possibly we will see this bull market slowing down. Of course, this would be much more easier to happen if dollar would really, in the next few weeks, start to stabilizing. As I said, and that's what I actually expect that will unfold and happen this year. Also, maybe Bitcoin. Keep in mind that, as we already discussed last time, here we have the S&P 500 in orange, then you have dollar in blue, and who think that Bitcoin will be trading down here at the same time. So this just confirmation there's no real interest in cryptocurrencies at the moment, and if stocks would turn lower, it would cause more damage on cryptos, which was confirmed yesterday. As soon as we have seen a sell-off on stocks during the US session, you can easily see how market came very quickly to the downside. But then during Asian session, or even in the final hours of the US session, we have seen some stabilization, but still cryptos, Bitcoin in general, did not recover. So it really looks like there are more liquidations on the way here, and I'm just waiting for this 80K to be taken out, and then possibly we could even see 74K. One last thing, for the whole stock market, what really should matter is maybe, as I said earlier, February could be very important based on seasonality chart for potential reversal on stocks. I would keep an eye on NVIDIA earnings. That's will be released in 3 weeks from now or so. And what I see here, based on the wave pattern, is that we have an incomplete ABC drop. So I think that now we are just consolidating here, and that just be aware that there could be a retest of much lower supports here, maybe even of these December 2024 highs.
We have USPPI, guys, in 1 second, whoever cares.
Yep. I'm just going
And
to
Canadian GDP as well.
Canadian
Screen.
GDP flat.
Flat.
PPI hotter. The core measures coming in one hotter, ex-food and energy. Ex-food and energy trade coming in unchanged over last month. So there is some speculate because this now feeds into the PCE data, and there's speculation that that's going to jump to around 3%. But now we've got the numbers out, everyone will get calculating on
Rate
that.
hikes.
Rate hikes, yeah, that loan cuts, rate hikes. We'll see about that. Yeah, so Canada data, yeah, a little bit softer than expected, but this is monthly numbers. So, and this is for November as well, so a bit backwards looking. Right, while we wait for Blake to turn up and get ready for his interview, Kay, anything on your radar today?
I must admit, not a lot, but we have spoken about all those important levels around 119 in the euro dollar. Cable, keep an eye on 137.25, which is the prior top. And then,
Do you want to grab it quickly before Blake gets in?
Yep, sure. So actually very, very simple-ish. Let me just start sharing, and I'm going to go on a shorter time frame here. Going to put that back onto a shorter time frame. You see, we are trying to make up our mind here in the cable, and again, I think it's going to be relatively important where we close. So either below 137.25, which could then drag it a bit lower, or above 137.85, and I think that's going to be. Then once the weekend is over, with the potential risk, etc., that is always there regarding Iran, etc., that's going to be then, I think, relatively defining for at least a couple of sessions. If we manage to get above, and that's why I was on the daily, because there this switch, we can see it more easy, that could actually then drag this one up closer to 140. That is under the condition that we close above that prior high that we saw in June. So that's something that I'm looking at in the cable. On the euro, I think it's really sorry, on the Aussie, we've already spoken about the euro. On the Aussie, it's all about this 50% line to me. For as long as we're above, and it may look that we are going to close above, the market will be looking at what's to come, which is the RBA on Tuesday. There are expectations for hikes, and then once we get Tuesday out of the way, we are going to make a real decision on this one, I guess. So, but keep this level in mind. Call it 60, 65, 69, 60, 65. I think that's a pretty important level on the Aussie, and just below we find that prior high as well. So if ever we start to fail, it could potentially come back in more into that what we saw here happening before. On gold, and that's really interesting, Ryan, what you showed. I know it's a bit of a messy picture, but I just want to highlight. So Ryan showed the 50% of 2026. This is really where we ended. Well, 31st of December it started. That 50% comes in at 49.38. The 38.2% of the ramp higher that started back in October is also at 49.48, and the a parallel kind of trend line that I've drawn on my picture going over this high here also comes in at around 49.40. So I think this is because everybody, of course, speaks about the psychological 5,000, but I guess this is really what's important. This level 49, call it 35.45. This is really where things will get extremely interesting if we get a revisit, see if we break below or we start to bounce. And I see Blake is in the house, so I'm going to pass it back over to you guys.
Thank you very much, mate. Yeah, Blake, have you got an interview today, Blake? Hello.
No, there's no interviews today.
Yeah, sorry, I was trying to unmute. I don't think there's any interview. Thank you,
Okay.
Stelios. I thought I'd just come in just to say hello and see what's going on. I mean, and just kind of, you know, work through all this stuff with you guys. I know you guys have been talking for the last 30 minutes, but I just wanted to pop in and say hello to everybody. So
Yeah, well, I'm going to put you on the spot for once. I want you. I want your top 10 plays for today, please.
all right, top 10 plays. Buy the Euro 119. Pick up cable on fresh lows below 137 if you can. Short the Aussie at 71 cents. Kiwi dollar at 61 cents is the short. Dollar CAD, if you can actually get a bid at 134, 67 or 68, which is the 161% extension, get long there. Short silver below 95. Short gold below 4,900. Get long S&Ps at 69.50, but short them at 70.10. Where am I at? Do I have any more? Oh, copper, I would be shorting it right here. Just put a hard stop above European highs. And then if you can get some dollar yen longs somewhere below 153.50, there, that's it. Did I give you all 10?
That's
Wow,
all 10.
amazing.
Look at that.
Thanks,
well
man.
That's brilliant. And that's the thing with trading, when you've been in experience as much as Blake has, you know your levels off your top of your head. You don't have to look at a chart to get them. You know,
Hell
where
effing
your
yes,
are.
we do. That's
Yeah.
right.
That's the learning process. Always know your levels.
Yeah,
Okay,
it's
don't
just
move
part
the
of when
chart.
you stare at a computer for, you know, 14 hours a day for 30 years, you kind of know where the levels are at. Like, it's interesting. I always know people that trade and people who pretend to trade, because when you look around and you go, hey, where's the spoos? You know, so I'm a big S&P trader. Where's the spoos? They're like, you know, and they have no answer for you. Like, dude, you know who trades and who doesn't just when you talk to them. So, I mean,
Yeah,
that's,
you can also spot them. Those who don't trade are always smiling. Those who trade are sometimes crying.
that's not true.
Yeah.
That is not true. I am always crying inside. I always try to smile. Dude, it's funny. It's funny you say that, K-Man. You know, I've always tried to shield my kids from my days. You know, I could walk out of my office and I could be down 30 grand on the day and walk out and I'm like, hey kids, you want to go? Let's go out for ice cream. And inside I'm dying, but you know, yeah.
Yeah.
Just try not to take work home with you all the time.
Exactly. There's always that's one of the biggest things in trading. You know, it's not getting sucked into the melancholy. If you're having a losing streak, you will suffer it. You have to walk away sometimes. Take a couple of days off if need be. If you're having a real bad time, but you know, you put out your mind, you come back again.
Hey, real quick before I let you guys go, I know we just gave a little bit of trading wisdom, if you will. Let's talk a little bit about this whole Warsh situation. How do you guys feel about Kevin Warsh? I mean, he obviously, you know, Asia came in and started buying dollars as soon as we got word that that was happening. But do you feel that's the right trade? Do you feel that you should be buying dollars right now just because Kevin Warsh is the man? Or do you think that there's more to it than just that?
Well, yeah, I mean, I don't get this buying dollars, because if he's going to come in and be dovish, that's, you know, essentially negative for the dollar. I think it's more the case of, is this going to be a complete clusterfuck in terms of Fed meetings moving forward? But you know what it's like. It's one thing when you're full of opinions on the sidelines and it doesn't matter. It's always another thing when you're sitting in the hot seat. We see that all the time from former governors of, you know, BOJ, ECB, BOE, all of them. They've all got big opinions when they're out the seat. It's going to be interesting. He's the biggest dovish hawk, or the hawkish dovish whatever on the Fed. He doesn't mind changing his opinion. Let's put it that way, as he has done over the years. So yeah, it's going to be interesting.
K-Man, what do you have to say about Kevin Warsh? Because I mean, you know, he's not a fan of quantitative easing. Some people forget that.
But he's going to, that's what he said at least, or what people understood. He's going to try to do both, is get rates lower and at the same time reduce the balance sheet, which is actually, if you think about it, not that different, although they are supposedly going far too slow, according to Trump. It's not very different of what the Fed has been doing actually over the past 2 years. Is to bring rate lowers and to stop quantitative easing. So we may. I think it's going to be a bit messy over Fed meetings, because are other Fed members going to agree with what he says, or are they going to start dissenting a little bit more? And that, I think, may create a bit of shockwaves. For the rest, he's probably going to cut rates because that's what a Trump nominee is going to be tasked with doing. But then the rest is going to depend on again those data. I mean, imagine that he cuts, but the economy is still doing well over outperforming Europe, for instance. Maybe there's going to be a bit of money going back into the States. I'm for the time being, my overall bias hasn't changed. I'm still biased for being a bit short dollars, but my positions are reduced because I am like the market. It's going up 30 points, it looks beat. It's going down 30 points, it goes offered. So let's just look at those levels. I'm as I was saying, I agree on the 119. There's a 69, 60, 65 on the Aussie, 60 the big figure on the Kiwi. There's lots of dollar pairs that are not that far away from quite good levels, and which could drag some flows into the market if they get broken, or indeed if they hold. So I think yes, follow the money is
all right. Follow the money. Stelios, I know I know you're here, and you tend to pop out when you have to with your daughter. So I want to get your thoughts on Warsh really quick.
Well, I did talk about that at the beginning, but I'm gonna repeat what I said.
Yeah, I wasn't here, man. I want to hear.
Yeah, I know, and you should be
hear.
psychic. You should already know what I'm gonna say. No, well, like you guys said, he's been always he's always said about talked about reducing the balance sheet, the Fed's balance sheet, but also I think he's going to be willing to go Trump's way with lower rates. So, but as I said before, which you weren't here, I will wait to see what he actually says and does before making any conclusions, because remember what happened with Jay Powell. He was saying all the right things, well, for Trump at least, and then when he came in power, he was a lot more hawkish. So do I think he can actually reduce the balance sheet without causing problems? No, that's a problem. So he wants to do that, but I don't think he's going to be able to.
Right. And the thing about Warsh, let's not forget, he's very well respected at the Fed. I think the only reason why he got the nod is just because Trump and his the administration really went around to find out who could actually be pushed through the Senate Banking Committee, because it sure as hell wasn't going to be Hassett, and Hassett just would have been a non-starter. So they had to get somebody to do that. And Warsh is probably looking around going, look, I'm going to outlive Trump physically. I'm going to outlive his presidency. I'm going to be his whipping boy for the next 2 or 3 years, basically, right? 2 years after he kind of gets in and gets his first cut, and then after that he's just going to have to be his whipping boy, just like Powell. And he's really going to be dealing with J.D. Vance, or whatever Democrat gets elected as president, or J.D. Vance, or whatever Republican. He's going to be dealing with that person versus Donald Trump. And he knows he's going to be able to preserve the solidarity and the independence of the Fed by being the whipping boy. And I think that's his role, and he knows that's his role. So and he's probably willing to take it on, which I find admirable, because I'm not a Warsh hater. I think him and Powell are probably going to give us very similar type of action, if you ask me. He'll probably just cut rates the first meeting in June, just because he told President Trump he would. So it's going to be really interesting the remainder of this year to see how the Fed operates. Hey, Grega, I know that you're here. Do you have any opinions about Kevin Warsh, or about what we're seeing in price action wise? Because before we all go, if I don't say this publicly to all of you as traders about silver and gold, I'll shoot myself for not saying it. So I have to say it, but I'll save that till after we get Grega's comments real quick. Grega, what are your thoughts here?
Yeah, I just think that whatever market expects, investors expect that the market will do the opposite. So if everyone expects how he will start cutting rates, I just think that market will do completely opposite, and We are seeing, like Stelios said earlier, that yields are somehow still flat. And I just think that we may see the completely opposite reaction. I mean, you know that I'm looking at the markets from a little bit different angle as well. And I see, unfortunately, some very bullish triangle pattern on 10-year US yields. We'll see what can bring it higher, but at least I cannot fight this kind of a price action, while I see dollar at the potential extremes here, approaching some serious support levels.
Yeah, and speaking of which, I mean, as far as like serious levels go, the move in the euro above 120, and I should probably just show you guys my chart, and it's been this way for ever and a day. If you guys, whoops, let me get over to my actual charts. That we've been looking at this rising channel, and the top of the rising channel, even though it was above 120, it was hit this week, and I think we're going to have to see a move above, the 120 or 121 level to really get things going. But that black rising channel has been there. We just probed above it. My lines might be off just slightly, as everybody's lines, when you're drawing things. I think it's still going to be really interesting to see what happens with the dollar over the next couple of days. I did want to say this about precious metals, though. Silver is back below 100, and if we trade or close below $95, you have to be very careful. I always tell people there are two big price action wise, there's two things that really put in major tops and bottoms. Whether you're talking about a blow off top, that's one, capitulation low, that's another, which is the inverse of a blow off top, or when you get massive volatility after a big run, lower or higher. So if you remember the bottom in the S&P at 666, for those of you that don't remember post-financial crisis, the volatility was so massive intraday, we would be up like 3-4%, down 3 or 4%, like literally for a week before we just took off and bounced. Silver and gold are giving me those same type of vibes. We're seeing moves that we wouldn't see in decades happen intraday at these highs, which suggests to me, whether it was a blow off top or not, we have to be really, really careful if you're long. And if gold closes below like 4,900, you guys just have to be really careful. And I'm not a bear per se on precious metals. I just think that if you're on the long side, you really need to be careful. I had to say that to just make sure I got that out today.
And I would pay attention to the weekly closing candlestick formation. I mean, if you take a look on gold, I mean, that would be really, really.
Oh yeah, let's. I forgot. I'm showing my chart. So yeah, let's go over to here. There's a gold. There's a weekly candle. That is nasty. Here's silver.
Yeah,
nasty. Yeah, the very ugly gravestone dojis that are developing there. So way to point that out, Grega. Ryan K-Man, Stelios. I think Stelios just bolted. Ryan K-Man, Grega. Any last minute things before we cut out a hero for a Friday?
No, I've said everything I had to say.
Yeah, all right.
Just keep an eye on this euro dollar 119. As I said, we've got a big 6 billion expiry in there today.
Okay, yeah, that's good to know. And plus, we have end of month flows, right now. So coming up. So, just be careful out there, guys. It's very volatile. There's a lot of moves, and probably more volatility to be had as we navigate through today. And Ryan, what time do these options expire?
In an hour and 12 minutes.
Okay, and if you guys don't have that information on Forex Analytics, you can go over here to where it says Market Info, go over to Orders and Options. Ryan is very good about mapping all this stuff out every single night. He looks on the Bloomberg schematics and gets those really, really big numbers for you. And this way you have kind of a roadmap. And if you don't have that information, well, you probably should be in the Forex Analytics community and utilize Forex Analytics then too. All right, guys and gals, I want to wish you all a wonderful weekend. Good luck this Friday. I'm going to see most of you in the chat room, and then I'm going to see you guys on the Morning Edge in about 25 minutes. Ryan and K-Man, thank you guys for just a wonderful week. I listen to you guys every morning. If you guys don't listen to the Flow Show, I try to listen to them every morning. I'm there 90% of the time. Listen to a recording. That gets me up to speed really fast. Grega, if you guys don't follow his work, obviously you can follow him on X, but you can also find all of his work uploaded every day here on Forex Analytics if you want an Elliott Wave point of view. So gentlemen, Thank you so much for a wonderful week of trading. And for the rest of you, thank you for tuning in. Next week's going to be a banger of a week. I can almost guarantee that.
Cheers all. Have a good weekend.
Thanks, everybody. Have a great one. And we'll TGIF. We'll see those of you on the Morning Edge in about